Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at NuScale Power.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis. The core story here is it's one of transformation and honestly a massive financial paradox.
That paradox.
We're seeing NuScale move from being this, purely pre-commercial R&D platform into a company that is finally, and I mean definitively, commercializing.
And when you say paradox, you're looking right at that third quarter earnings report, aren't you? Because the numbers, they tell two completely different stories at the same time.
Exactly. I mean, on one hand, you have the proof, the commercialization. You have the sharp revenue inflection.
Okay.
In Q3 2025, they reported revenue of $8.2 million. Now, you contrast that with the prior year's quarter, where they brought in just, what, $0.475 million?
That's a huge jump.
It's a monumental, exponential jump. This isn't theoretical anymore. This is real customer cash, mostly driven by work like the Fluor Phase 2 a feed study.
So that $8.2 million, that confirms the engine is finally running. But the other side of that coin is the eye-watering net loss, minus $532 million. For listeners just tuning in, that sounds like a company that is just, well, completely failing. We have to confront that $500 million number.
We do, because it is the biggest hurdle for an investor to get their head around mentally.
Right.
But to really understand NuScale, you have to understand the nuclear regulatory world. The bullish argument, well, it views a huge portion of that $532 million loss as non-recurring.
So front-loaded costs.
Exactly. This is the necessary, painful cost of building the regulatory platform and the SMR intellectual property itself.
So it's not a loss from, bad operations. It's the cost of admission to the industry.
Precisely. Think about what it takes to get U.S. Nuclear Regulatory Commission, the NRC approval, years, sometimes decades, and billions in design, testing, documentation, just to get the government to say, yes, this design is safe.
Okay.
That cost is front-loaded. You pay it whether you sell 1 reactor or 100 in your first year. But once that foundation is built, the operating leverage should become massive.
That reframes the loss as an investment, not a failure. So if that investment is starting to pay off, what does the market expect the path forward to look like?
You need to look to 2026. For the full year 2025, consensus forecasts are for revenue around, say, $42.9 million, which is solid but still small. The real inflection is expected in 2026. Revenue is modeled to hit about $141.1 million.
Wow.
That's a projected year-over-year increase of about 229%. That's the number that says this investment is finally converting to real growth.
229% growth is massive. But what's driving that specifically? Is it just more of these early-stage studies?
That's a great question because the quality of the revenue is what matters most here. The spike is expected because projects are graduating. They're moving from low-value work, the front-end engineering and design, or FEED.
The paperwork and modeling phase.
Exactly. And they're transitioning into engineering, procurement, and construction, EPC.
So that's where the big money really starts to flow.
Absolutely. The EPC phase, that means buying millions in materials, locking in supply chains, planning construction. That's when you recognize significantly higher revenue.
And that transition should also help the bottom line, right?
Yes, the market expects that operating leverage to start kicking in. EPS is projected to improve pretty significantly from a loss of about $1.49 a share in 2025 to a projected loss of around 81 cents in 2026. It shows that revenue is finally starting to outpace the spending growth.
That growth ramp brings us to the competitive advantage, the moat. What shields NuScale from new companies trying to get in on this SMR hype?
The moat is almost entirely built on regulation and IP. And let's be crystal clear, the most critical detail here is that NuScale's SMR design has formal final approval from the NRC.
That's huge.
It is an unparalleled barrier to entry. For a competitor to get that stamp, they have to spend years, hundreds of millions of dollars, and go through a brutal decade-long process.
So it's not just a first-mover advantage, it's a first-approved advantage. Having that NRC stamp gives them a real multi-year head start.
Exactly. Other SMR designs might look great on paper, but until they have that clearance, they cannot be built in the U.S., period.
And strategically, how are they using that lead?
They're locking in long-term partnerships. The collaboration with Entre One Energy is a perfect example of this.
Right.
They're aiming to deploy up to 6 gigawatts of SMR capacity by 2030. These are multi-gigawatt, decade-long commitments.
And here's where the story shifts. It goes from slow utility replacement to high-speed tech infrastructure. And this is where it gets really interesting for you, the listener, if you're tracking the broader tech landscape, the AI and data center catalyst.
This is the absolute game changer. For so long, nuclear power was about replacing old coal plants on a 50-year timeline. Now, NuScale is positioned right in the middle of the highest growth sector on the planet.
So tell us about that validation they just got.
Yeah.
Why is the Standard Power deal such a breakthrough?
The Standard Power Entre One NuScale deal is critical. It's market validation because it positions SMRs as, well, necessary infrastructure for AI and machine learning compute.
Data centers.
Data centers. They need huge amounts of power, but they also need it to be incredibly reliable, clean, and often decentralized, far from existing power lines.
So traditional grid power is often too slow and too centralized for what these hyperscalers are trying to build.
Precisely. Connecting a new gigawatt-scale data center to the grid can take 5 to 7 years, just for the permits.
Wow.
NuScale's modular-approved SMR, it offers a solution that's faster to deploy, reliable 24/7, and scalable. This deal connects NuScale directly to that explosive demand for AI compute power.
And this commercial traction ties right back into government interest, doesn't it?
Absolutely. The U.S. Army, the defense sector, they're very interested in small reactors for base energy security. Plus, the Department of Energy is committed to SMR tech in general. It all reinforces this very favorable policy backdrop.
Okay. All this growth, all this future planning, it takes a ton of capital.
Yeah.
So let's address the real structural risk here, the capital needs and the potential for dilution.
That is the core bearish argument. No question. They have ongoing cash burn. And the biggest near-term event you need to watch is the special shareholder meeting. It's scheduled for this December 2025.
And that meeting is specifically about voting to increase authorized shares.
It is.
And for investors, that's a clear signal. The company plans to raise more money by selling stock, which means dilution for everyone who already owns shares.
It does, and that is the critical risk to weigh. It suggests that they are prioritizing execution speed over minimizing dilution right now.
But the bull case here is that if they raise the money now, while the stock price is kind of elevated from all this AI hype, it funds the entire multi-gigawatt pipeline. It de-risks the whole multi-year schedule.
Exactly. Delaying execution in this industry is far, far more expensive than equity dilution. And don't forget the strategic backing from Fluor.
Right. They've historically held a huge stake.
Close to 40%. Fluor is a giant in the EPC world. Their involvement adds massive engineering credibility. It suggests real institutional confidence.
Okay, what about some other risks? There were some investor lawsuits related to a past canceled project. Is that still an overhang?
It's a reputation risk for sure, but the market really seems to be shifting its focus. The pivot to data centers and defense, these are entirely new deals. Investors are clearly focused on the future pipeline, not the legacy issues of the old one.
And the share overhang. We saw a majority shareholder sell 15 million shares. That's a huge block of stock to hit the market.
It is, and in the short term, that can depress the price. But there's a positive way to look at it.
Which is?
When a large block like that gets sold, it massively increases the free float, the liquidity of the stock.
Which makes it easier for big institutions to buy in.
Precisely. Large funds often can't buy illiquid stocks without moving the price too much, so increasing the float actually helps stabilize the stock in the long run.
We've covered fundamentals, we've covered risk. Let's look at the immediate price action and the technicals, because this stock has been incredibly volatile.
Volatile is an understatement. As of December 5th, 2025, the stock closed around $22.32.
Okay.
But the consensus analyst price target is around $38.50. That implies, what, roughly 80% potential upside from here.
That's a significant gap. And we also just saw that painful 38% drop in November. So for investors watching the chart, what does that technical setup look like now?
For momentum traders, this sets up a classic deep pullback scenario. The stock was sold off hard, but now we're seeing early signs of a recovery in early December.
Okay, so let's get into the actual indicators that are signaling that. What happened on December 2nd?
The technical signals are pointing to a short-term reversal, the mid-ACD. The moving average convergence divergence. It turned positive on December 2nd. And just as important, the RSI, the relative strength index, it exited oversold territory.
Which is a textbook signal that selling pressure might be exhausted.
It is. It suggests momentum is shifting from the bears back to the bulls.
But the moving averages are telling a more cautious story.
They absolutely are, and you can't ignore the bearish signals. The stock is trading below its 50-day moving average, and the 10-day MA crossed below the 50-day.
So a bearish signal.
Yes, but that creates the contrarian opportunity. A sustained move back above that 50-day moving average would confirm a significant trend reversal. That 50-day line is the immediate hurdle to watch.
And we're also seeing options volume picking up, which suggests traders are positioning for a breakout.
Exactly. Options volume is skyrocketing. That points to a lot of speculative interest, a lot of call buying, as traders position for that 80% move toward the analyst targets.
Let's shift to the immediate future. For anyone holding or watching this stock, what are the key tangible events over the next 3 months? The catalysts you need to monitor.
Top of the list is that December 2025 special shareholder meeting. The market is going to be laser-focused on the vote to increase authorized shares. And not just the outcome, but the terms of the capital raise that follows.
And we'll need more detail on those big commercial deals.
Absolutely. Updates on the Standard Power and Entray 1 data center initiative are critical. We need to see deployment schedules, capacity numbers, the economics.
So we can actually model that 2026 revenue ramp.
Correct. And we should also look for updates on the completion of Fluor's Phase 2 EVI study. That completion drives more revenue recognition.
Zooming out for a final thought. What are the big macro tailwinds supporting this whole SMR space?
The structural driver is generational. AI and data center power demand. Hyperscalers are facing an energy crisis. They need low-carbon, reliable baseload power, and they need it now. SMRs are perfectly suited for that.
And the second macro catalyst is the cost of capital.
Right. If we see rate cuts materialize, which is the general expectation for 2026, long-duration growth assets like SMR developers should benefit hugely. Lower discount rates make their distant multi-billion-dollar cash flows much more attractive today.
So let's put it all together. What does this mean for you, the listener? Give us the final summary.
NuScale Power is a strategic nuclear asset. It has a unique NRC-approved platform, and its revenue is finally starting to inflect upwards and rapidly. The investment thesis is a clear trade-off.
A trade-off.
You're accepting the real near-term risk of dilution and project execution in exchange for access to a multi-year high-growth ramp driven by critical demand from defense and the AI sector.
So multi-year hold.
It is, but it's one that also offers these tactical swing opportunities around things like capital raises and major project announcements.
The narrative conflict. A $500 million loss, financing a technology that could power the future of AI, it really highlights just how dramatic this story could become. If they execute on these data center deals, and that December shareholder vote goes smoothly, the potential upside implied by analyst targets is simply too large to ignore. We'll be tracking that shareholder vote very closely. Make sure you are subscribed to get our next update.